Hello and welcome to another Swing Trader status update. It's Justin Nielsen here, your host, and joining me, as he will be every week, is Mike Webster, the senior market strategist and really kind of the brains behind Swing Trader. Since he returned, one of the big things he's doing is really kind of focusing on kind of making it a lot more active. Using some of the things that he has learned over the past few years, not to mention the last 25
Are you
30
trying to age me?
yeah, okay, yeah. But you know what, we before we start into that, I wanted to just take a moment because today is actually a year since the passing of the founder of IBD, William O'Neill. Mike and I both spent a lot of time with him, worked on a lot of books, projects, went through a lot of charts with him. And I just wanted to kind of take a moment, Mike, if you want to kind of share one of your, I guess, things that you learned from Bill, but maybe you reflected on today.
I think most of what we talk about, Bill, will circle back at the end because I know people are anxious to get through things. But basically, everything that we do is related to something that we learned directly or indirectly from Bill. Everything that you do, everything that I do, everything pretty much everyone at the firm does. And I'd say the main thing that I learned from him, so many things, but his work ethic is just like yours, and Ed Carson's. Honestly, just like next level, kind of like Elon Musk type of work ethic that he modeled for us. His humility, but really his openness to always wanting to learn something new. That he had figured out enough when he was 20 years younger than we are, and he had enough money at that point to just retire and be done. But he wanted to keep going, and he was always trying to figure things out. And the two of us got to work so closely with him, pretty much unlike anyone else. We both saw him up close, the good, the bad, the ugly, the beautiful, everything in between. And it was just amazing. There was nothing like him, and always wanting to learn after decades in the market. And that's something that we strive to do, and always, like you say, iterate. You make a mistake, and I think we were talking about what are we going to talk about, Bill, today. And the thing was this constant post analysis of reviewing your mistakes and your successes to try to do more of what you're doing right and less of what you're doing wrong. And he was doing that until he retired. And just we'll have more on Bill, but just wanted to get that part out. And we're just all blessed to have spent time with him.
Yeah, and I mean, really, it's interesting to me because to that point, he was not someone to rest on his laurels. It was one of those things where he was basically my age when he decided to start the paper. And that's just incredible for me to think about that. Again, as you said, he could have just retired, but he took on this whole big new project. So anyway, let's go ahead and get into some charts right now. And we're going to start with SPY. This is something that we still have on SwingTrader right now. It was on the edge. We have a full position there, but this day, downside reversal came all the way down. I had an alert at 525.18, I think, which was the low here on the May 15th. It did puncture that, and it just came right back. And then it just kind of the rest of the day on Thursday, it just kind of went back and forth. So talk a little bit about the downside reversal. And of course, we're not going to go into it too much because you really went into detail on it on the SMT video, Stock Market Today with Ali. Very detailed there. So we're just going to touch on it very briefly here.
Who should watch the Friday SMT, Justin?
Everyone.
Okay.
Everyone.
So. Look, you're right up to speed. Okay. So the downside reversal that we had last Thursday was extremely important and very telling. And it's kind of like you're playing poker, and it's a tell that we have, and we didn't know it at the time. So when you have that downside reversal, and Charles Harris, Justin, and I created IBD's market school rules, which are black and white rules, to help with market exposure, because market exposure is the most important thing that you do is really knowing what your speed limit is, how deep in the market can you be, and everything else kind of falls in after that. And so we wanted black and white rules so there wouldn't be emotion involved, whether you're flying high and you're doing great and you want to push it harder than you should, or you've had some bad trades, or you're scared and then you contract too much. We wanted to just let the market tell us with black and white rules. And one of the things that the three of us discovered, and we just did it with an open mind, learning from Bill, we sat for about a year at least, just looking at the NASDAQ day by day through history, the three of us on the phone. This is prior to Zoom, and just going through it. And, we'd throw out, hey, Justin, what if we had a rule when this happened? Then he would come up with something. And sometimes it would take him a while, and he'd send us something at 3 o'clock in the morning or 2 o'clock in the morning. And those were some long hours.
Good times.
We came up with the downside reversal and then its counterpart, the downside reversal buyback. So an important part of market school, and this is all I'll say with it, is we balance things out because it was a teeter-totter. So if we were above the 21-day, we would add exposure. Below it, we would subtract. Above the 50-day, we'd add exposure. Below it, we'd subtract. And we did the same thing with the downside reversal. When you had the downside reversal like we had last Thursday, and why don't you define what that, in market school terminology, what that is, Justin?
You know what? You might have to, because my Wi-Fi is a little light. So
no problem.
Go ahead. I'll let you do the talking.
So essentially is a wider than average spread after hitting a 13-week high and then closing in the bottom portion, like the bottom quartile. And that's what we had on Thursday. So I'll just take it until you feel like your connection is better, Justin.
Lily said I'm okay. So
you're okay?
It's showing yellow on my end, but she says I'm okay. So
okay,
go ahead.
So with that downside reversal, it basically means that you should have further weakness. And typically it's 2 to 3 days of pretty nasty selling that would have happened. And that would have driven us down to the green line, which is the 21-day. That would have been normal action. And frankly, what I was expecting and preparing for. And one of the things that we learned from Bill was there's the quick and the dead in the market. That's something that he put in his book, How to Make Money in Stocks, an old quote. And meaning that when you have a downside reversal, you want to take action that day. And that's what we did. What did we bring our exposure from to on that day, if you have it handy?
You know what?
I'm thinking a little bit over 100 to in the 60s.
Yeah, I think we were at like 108 and then down to 68, if I recall. But
that sounds about right. And that's really, even knowing that we bounced back with an active product like SwingTrader, that's what you should do on that day. Any more than that would have been a little bit overreaction. Any less than that would have been maybe an underreaction. So really, from bringing it from like 100, a little over 100% to, let's say, 60 to 80 would have made sense based off of that action. And you thought it was going to come down. Now, what happened was we had another tell in the market on Friday where we went back up when we should have gone down. That was a big deal. Like, that was a huge deal. The market telling us, no, we don't want to go down. We're just started this power trend. So what did we do? We completely reversed gears and said, you know what? Let's pull up the NASDAQ. I think it's a little bit more interesting on that one. That we said, our speed limit is now back up to 100%. So we looked around. We didn't force it. We just said, okay, we just sold a bunch the day before because we were expecting a pullback into the green line, the 21-day, which would have triggered a lot more stops than we had, and we would have had to sell more. But instead, we got this action from the market saying, hey, we're stronger than you think, and we're blowing off what had happened, the downside reversal that happened on Thursday. And then today, we had something very important, which was called the downside reversal buyback. Do you want to explain that, Justin? Is your connection okay?
We'll see. So I'm gonna.
I can hear you.
I'm gonna look to my producer and make sure she gives me the okay and tells me if I cut out. But yeah. So okay, the buyback, sure. It's when you close above the high of your downside reversal. And again, the reasoning behind that is you're just you have an expectation, but especially if you can get back there within 2 days, something different is happening. And I'm also just going to add real quick some extra color that last week we had actually gone a little bit lighter ahead of NVIDIA earnings. That was a big event, right? And it could affect a lot of the tech stocks. And so we did lighten up a little bit ahead of NVIDIA earnings. Those came out Wednesday after the close. So we were about 74% invested. Prior to that, NVIDIA comes out, things are looking great. We started adding a little bit, but then they reversed and we quickly had to back away. And that put us back down to 68%, roughly by the end of the day. So that's what happened there. And yeah, so now, as you said, back in business. Again, it doesn't matter that we went low and sold stuff. This is again something that we learned from Bill. If the market tells you something different, it doesn't matter what you thought yesterday. You got to react to what the market is doing today. Never plant your flag in the sand, because, and he also always used this bend with the breeze type thing, and he would talk about those trees that are in very windy areas, and the ones that are rigid, they break. The ones that bend, they kind of almost change their shape, because they're moving with the breeze, and those are the ones that survive. So let's talk a little bit of.
Go ahead.
Go ahead. I was going to say, let's talk a little bit about the software side,
Sure.
because one of the things that was interesting, as strong as this day was, and look, it was still an inside day, so we didn't want to overdo it, right? But there were a lot of stocks that got back above their Thursday highs, even though the market hadn't on that day. So that was interesting. But software was one area that didn't, and we had IGV, which is the iShares software ETF. This is one that kept going lower on Friday. Now, part of that was ServiceNow, a big component in there, which we also had. So we had to shake some of those off, right?
Yeah. So that's important to stay flexible. Again, something that Bill taught us, and that bend like a tree in the wind thing is something. Frankly, we had a lot of wind blowing out of place and a lot of trees today. And I was, spending a lot of time thinking about Bill, and I was looking at him, and it was just, kind of smiling, and that's what he taught us to do. And with the IGV, frankly, when we were coming up there, and if you pay attention to that blue or the green line, which is your relative strength line, it was moving back through its 21-day moving average on the way up and got right up to its 50-day, which is the blue line. And I really thought this was going to start carrying us forward, because it kind of sat out for a while. And you know what? You bend like a tree in the wind, because it looked like it was going to go. And for whatever reason, it just isn't ready yet. That RS line is even weaker today. So in general, we're staying away from software, even though we're starting to move into that space. So that RS line is something that Bill picked up on before both of us were born, and the importance of it. And we've done more work on it ever since. And it is, if you could only have one thing on your chart, it would be the RS line, in my opinion. Even before, I could trade with just the RS line and probably do okay without anything, including price, volume, any moving averages, just that, if you really hone your eyes in on it. So when you look at this and just go, you know what? It was starting to work out, and then it failed. So we moved away from it. This is a very active product, and that's what you want to do, is move to where the money is flowing. Let's go over to SMH, which we do have on as a full position. And that one, that's how we have our exposure to NVIDIA, because if to pull up NVIDIA, which we both have a position in, we had to remove NVIDIA, as well as I think we had Avago and SMH on going into the NVIDIA earnings, because frankly, we didn't have enough of a cushion to withstand it. And it was just too much of a risk event. And so we hoped that this would happen. You would have a gap up and move higher, but we didn't know that. You don't know that going into an earnings event. And so one of the reasons why we want you guys tuning in every week is just realize that, you have to be flexible and you have to manage your risk. And that's what we want to talk about each week, is when you go into a risk event like a big CPI, PCE, Fed day, or in this case, an earnings announcement, you have to look at reality and go, how many, if you're playing poker, how many chips do you have in front of you? Meaning, how well are you doing for the year? If you're not doing well, or you're not doing as well as you'd like, you have a fewer chips to play with, so you can't take on that extra risk. Now, leaderboard, which is run primarily by Hatman and Eagle Eyes, by Dave and Ken, have done an excellent job, and they had chips to play with, and so they went into the Nvidia with a big position. They had it hedged a little bit, I believe, but they were able to benefit from that. So there's just different approaches, and not one's not right and one's not wrong. It's just a different way of looking at things, and also based on the approach, whether you're swing traded, active trading like we're doing, or you're position trading the way you're doing with leaderboard. It's just a little bit of a different approach. So again, knowing the exact same information that we have now that NVIDIA ripped up, going back, we would do the same thing. We would have peeled off SMH, we would have peeled off an NVIDIA, and we would have peeled off Avago, because it could have gone the other way.
Right.
And then we would have, what I was afraid of is a gap down reversal higher, meaning, which happens a lot, where you have a weak morning with a close strong, and we wanted to raise some cash going into that event, hoping for a weak open that we could get some nice upside reversals and buy things as they were getting stronger in the day. That's not how it played out.
We got the absolute opposite. The worst case scenario was the gap open, where you start feeling like, oh, okay, now things are ripping without me, and and then it reversed. So it was the exact opposite. But again, there's no, you can't force the market to do what you want. You can come up with your expectations, you can come up with what you'd like to see happen, but at the end of the day, you can't force the market to do what you want.
So the learning lesson, we'll just wrap this part of it up with, when you go into an earnings announcement, look and see how much you're up on the year, give yourself a grade of how you're doing, a subjective grade, A to F. Look at the market, give it an A to F. You can use IBD's market school rules. Right now we're at a +7, which is an A plus really. And then also just look at that stock, how much you're up or down on it, and say, can you withstand a 10 or a 15% gap down? And if you can't, then exit that position, and you can always buy it back. Or in this case, we bought back the SMH because NVIDIA was just a little too extended. Now it's way too extended for a swing trade.
And there are some extra things you can do to kind of fine tune that. One of the things that Mike does is he'll look at the ATR, not just the ATR, what it is now, but over the last year. Okay, what is the max ATR? What is the biggest moves that it has, so that you're prepared for that? I like to use the option market. I'll use the at the money call and the at the money put. Add those two premiums together to kind of give a sense of what the option market is saying the range could be. And then, I'll either use that full amount or actually go a little bit higher to say, okay, could I withstand that? And that's why I was able to withstand NVIDIA, because, like leaderboard, I had some cushion because I had played it before, and so when I say cushion, I might have had to rebuy it after our restricted period on SwingTrader was over. But, I was looking at, okay, this is the position that I got earlier. And
just so it's very important that people know our compliance rules. So like if we're putting NVIDIA on or SMH or anything, we have to close out our positions, Justin and I, before we put it on. Dominic and Chris Kessel as well, because it's the four of us are on the team, because we want to make sure that you guys, we don't front run you. So we have to wait 30 minutes, and then we can buy the position back along with everyone else. So just in case anyone was ever wondering, and we sacrifice our own positions, and that's just the right thing to do.
So I want to real quickly kind of shift gears a little bit. What we're going to do is we're going to go over to kind of where we're at right now in terms of our kind of weighting. And just like last week, I'm going to show this pie graph that we have. Let me pull it up right now. And we've got big weight in retail right now. So, whether it's, I mean, there's some restaurants that we have, and that's not even including, we've got Toast that we talked about last week. That's in finance, but kind of retail related. So retail adjacent. We've got medical software. We've got some there. Even though we did take off Pure Storage, we're going to talk about Pure Storage in a moment because that does have earnings coming up tomorrow after the close. We've got apparel, which is related to retail to a degree, energy, leisure, and the ETF now. So this is where we are getting our NVIDIA exposure from the ETFs, because we do have SMH, we have SPY still, we have QLD. We got rid of our Qs and actually went double. So this is actually our largest sector is the ETFs. And, again, it's heavy, a little bit heavier in the chips because all three of those ETFs do have chip exposure, of course. So talk a little bit about why ETFs and how having a 30% position, how that kind of eats into buying power to a degree.
Yeah, I was just looking at some notes that were coming through. So as far as the ETF goes, just keep in mind that that's really even more than that 30%, because the QLD is a double, and using ETFs to get positions is really something I've used for a few decades. As far as I like to call it an SOF, or a source of funds. And so when you're trying to get exposure quickly into a space and the individual stocks are out of position, then what you really want to do is get it through ETFs, whether that's a sector ETF or like the SMH or the IGV that we tried that didn't work out, or the broader based ones like a SPY or a Qs, or in this case, the QLD. What that allows you to do is get that broad base exposure and then wait for your spot, wait for the NVIDIA to give us a place to enter it, or an Avago, or ServiceNow if it comes back, in 2 weeks or 2 months or something like that. So you have the exposure with the ETFs, because again, you really want to be thinking of when you're in the market, how deep in the market should you be? And that should really dictate things. And if you're 70% in and you look at the market and say, you know what, I should really be 100% in, an easy way to get there is using ETFs as a holding place and then going in and selling those off when you need that capital, if you don't want to increase that exposure. Sorry if that wasn't directly answering your question. I was trying to read some of the comments that were coming through.
Yeah, no, that does work. So let's kind of shift gears back to some more charts and talk a little bit about some recent positions, and we'll go ahead and start with Pure Storage. Pure Storage PSTG. I'll bring that up right now. And this was an idea that came from Dominic. Yeah, so
I'm so proud of Dominic. Now, Dominic, for those of you who don't know, is the son of Chris Gessel, the chief of IBD, the
chief content officer.
Chief content. I just call him Chief. I'm trying to work on a nickname for him, and it's going to be BB, whether he likes it or not. But we'll talk about that another time. But Dominic is, does not act like he's the son of the boss, and something I'm very proud of him for. And he brought this name up, and we gave him the con, and he did the whole trade on his own, and I think he nailed it. And so why don't you show him what he did?
Yeah, so I mean, this was, coming out of this really nice double bottom. We saw so many of these double bottoms that were fairly shallow. I mean, 17% is, for a double bottom, pretty shallow. We saw a number of double bottoms actually that were coming out, and their depths were enough to qualify as a flat base. And what was particularly intriguing, I think, about this Pure Storage is how it had this huge move on its last earnings, and it really held the bulk of that, staying in the upper part of that range on the weekly chart. So I agree with Dominic. This one really looked good. It did this nice little pause right at 55.09. That 55 level just seemed to be an area that was important. It got touched a number of times, came back down, but this time it came through and it was off to the races. This one was actually held as it had this little shift right here, touched the 10-day moving average line, came right back. The downside of reversal, as ugly as a lot of things were, this didn't, we didn't get knocked out of this one. I think maybe we took a little bit off, and some of that was because we were expecting more pain to come. And with earnings around the corner on Pure Storage, it was kind of, okay, maybe we can't withstand, we don't have enough time to let this kind of recover. So again, Dominic made that decision to take a part of it off. But it came and we just sold it into strength today. Tomorrow it's got earnings. This is certainly something that if you wanted to turn it into a position trade, we had like a 10% gain on it. So certainly that was something that could be done. And again, remember, you don't have to follow everything that we're doing, folks. If you're taking the SwingTrader product, you should be using this as ideas, hopefully things that you can learn from. But at the end of the day, you've got to make your own decisions, what's right for you. So I could certainly see holding on to Pure Storage through earnings, or look, this was a nice gain in a short period of time. Taking your 10%, moving on to the next thing, that's okay too.
Yeah, I want to echo that because I think it's very important, because we'll get a lot of comments from people, they get the alert and they feel that it's 1 or 2 minutes late, a little slow on their end. And there's some technical things that they can work with customer service on how to improve that. But really, it shouldn't be, for most people, I don't think it should be trying to duplicate to the penny everything that we do. That it should be, hey, the guys are, had it down at 68% and now they just ramped it back up to 100%. Why are they doing that? Let me try to understand why they're doing it. And that's why we decided to have these weekly meetings, so we could discuss, hey, look, we reduced exposure going into a risk event of NVIDIA. Then we ramped it back up. Then we had a major downside reversal. We had to adjust to that. Then we had a downside reversal that was buyback. And so we were adjusting to that. So just kind of think more in broader strokes, but you also feel free to go through, and some people want to do it exactly right or do it exactly the way we're doing it. That's fine. But personally, if I had Pure Storage and, I had a big cushion in it and I was up a lot, I would say, okay, I'm going to dial this back to, if it comes into 55.09, which is the pivot of the double bottom, that I'm still feeling okay. But we don't, right now, with this product, we don't want to hold into earnings until we're doing better, till our letter grade that we're giving ourselves is better. At that point, then we'll start holding positions into earnings, and we want to hold things for longer periods of time. So again, moving away from swing trading and more of a hybrid of swing trading and position trading as we start getting the traction that we want.
Mm-hmm. And let's go ahead and kind of wrap up this session with a look at one of the stocks that is still on, and that's on holding us, the shoes. So shoes kind of hold a special place in your heart because you've done a lot of studies on past winners. You've got Reebok, you've got Nike, you've got Skechers, you've got LA Gear back in the 80s. There's so many. Crocs. Heck, that deserves a place in a model book twice because of its move earlier in the aughts and more recently. So talk a little bit about ONON. This has been quite a move, and we did take some off into strength. And so again, there's again, sometimes we're going to be taking some of these off, not that they're doing anything wrong, but into strength. So maybe talk a little bit about why.
Yeah, well, a lot of that was when you're extended like this, especially from your 21 day, it can keep going. That's why we've kept the majority of the position on, but we did want to book some of that so we could use that same capital for something that was closer to a pivot or just have less exposure. I think we closed at right around 100% invested today. So right now I'm kind of looking at, I want to cap us out at like 110, maybe 115% deep on a closing basis. But my comfort zone is really with the market. Let's go back to the NASDAQ. Really 90 to 110. That's where I feel like we should be based off of the market, what the NASDAQ is doing right now. Now, toggle over to the IWM and MDY. Now, those aren't doing as well.
A little bit of a different picture.
Yeah. So that, and you can see with that relative strength line and MDY, and even the RSP, which is the equal weight of SPY. So there's reasons, for people to look and say, to be more conservative. And there's nothing wrong with that when you broaden things out and you look at, this is a nice cup with handle, but your reaction that you had on the downside reversal last Thursday, the downside reversal we had in the other indices, that wasn't a downside reversal here because it was already weak. Downside reversal, you have to be at highs. So this was just a breakdown to its 50-day, and then it got support there, but we didn't see that bounce back. And this is the way I look at market breadth. So what is that telling us? Let's look at SPY, because RSP is the equal weight of SPY, which is market cap weighted, meaning, NVIDIA, Microsoft, Amazon, Apple, and so on, way more than your average stock in these. And this one is kind of somewhere in between. It's closer to NASDAQ than it is to RSP, but it's not back at new highs. So you put all these pieces together and you go, you know what, I could see being a little bit lighter, but really we like to, one of the things that Bill taught us was to just use one index for your follow through day. So he would always have a kind of an open mind. And back then he would look at the Dow, the NASDAQ, the New York Composite, the S&P, and some other ones sometimes. And when he'd get a follow through, he'd say, okay, the market is now in an uptrend until proven otherwise. And that's kind of how I look at things when you're resuming. NASDAQ happened to lead. Let's toggle back over to NASDAQ, lead us back into new high ground. So that's our leader right now by definition. It's at new highs, went above the 17,000 psychological area. So there's no reason, logical reason, in my opinion, to be holding back when your leading index is at new highs. So that's where you want to be closer to 100% if you're aggressive. And that's what this is, an aggressive product. So going back to ONON, that's a long way of saying when you're looking around and going, you know what, I want to get more exposure. I have a little bit to play with. Let me take some off into strength rather than always being forced into like the IGV to, getting stopped out on a loss. So we wanted to reduce some of it because we already have Crocs on there as well. And so that way we can deploy that capital into other things that are set up. Like, for example, pull up Wing, which is one of the last things that we added today. And this is in a position where it's not extended from its 21 day. It just regained its 21 day and it's underneath the 400, which is a nice round Livermore number. So, and we also have a nice clean stop with this. We're not going to let it close below today's low. So that's a nice tight stop. Now, if you're position trading, you might let it go all the way down to its 50-day. But so that's what we wanted to do, is take money out of something that's already up and kind of a little extended and put it into something that was more in position that we will know right away if we're wrong on.
Mm-hmm. And I forgot to disclose that I do have a position on. That was something that I bought shortly after SwingTrader did. So good gain on that. Okay. Well, I think we're going to go ahead and wrap it up, especially since my connection just went ugly again. So I think I might have to let you kind of do some closing thoughts here, Mike.
Yeah. So my closing thoughts as far as SwingTrader, I would love everyone to take a trial of it, see if it works for you. We're very active. So you want to make sure that you're comfortable with getting a lot of alerts. And that's fine. You don't have to, like we said, you don't have to trade on every single one that we put out there, but just use it as an educational tool. I'm putting all my effort into SwingTrader because this is my mission of trying to give back and trying to do what Bill has taught us. And so I told myself I wouldn't break down today talking about Bill, so I'm not going to. Really going to do my best. He really did a lot for so many people that he never met. That he really, with his book, putting out all of his secrets out there. And one of the things I always talk about is when Bill would come up with a new strategy or something new that Justin would help him with, or that I would help him with, or somebody else would help him with, his instinct wasn't to put it out with the institutional side, which was the firm that I was working for at the time, the William O'Neill and Company. His instinct was to put it out in this dollar and change newspaper out to the masses because he wanted to help everyone. And that's what we're trying to do with SwingTrader, and what I'm trying to do with my time at IBD. Be blessed to be back and welcome back, because I really want to make a positive impact and take what Bill has taught Justin, Chris, myself, and others at the firm and really take it to the next level, and always be learning. That's what he taught us, is you don't sit and go, oh, I learned this 20 years ago and I'm going to stick with that. He was always pushing it and always pushing me to do more and work harder and learn things about the market. And that's what I'm trying to do, and just share it with everyone. So if you want to be part of that ride, take IBD Live. Watch, if you don't have the extra capital, I understand. When I did my first trade, it took me 6 months of saving $450. I had to sell my CD collection. If you haven't picked up on it, by my office, I'm a little bit of a fan of music. And that was the only thing I had of value at the time. And, I sold it so I could buy my first stock, which was Robert Mondavi back in 1995. And, and after reading Bill's book and just learning from it, and then, became a PM with him back in 2000, shared an office with him for a few years. We spent, every Sunday night for 15 years, hour to 2 hours talking. And I'll just leave it with this, the kindness that I've told this story before, but I think it tells a lot about him. And I've been thinking a lot about my kids who just turned, or going to be turning 23 this year, just graduated. When I found out that I was pregnant, or I wasn't pregnant, but when their mother was pregnant with them, and he was the first person who found out about it. I got off the phone call, came back in the office, looked like I'd just seen a ghost, and he said, "What's going on?" And we'd gone through the whole artificial thing, and we're blessed to be pregnant, but it was more than one. And this was during the bear market of 2000 to 2002. And I told him how worried I was, and I was going to have to move up to LA. I was living in Orange County, and anyways, he sat me down and had the nicest conversation. He went through when he started the newspaper, or not the newspaper, started the firm back in 1963, what he did, starting his family of four, then starting the newspaper. And he went through all of this. And he said, Mike, I never worried about anything, that I just knew that it was going to work out. And that's what he told me. And then later on, he offered for me to move into his house with him and raise my kids there. Now, we didn't do that. I regret that deeply. That would have been, God, I made some stupid mistakes in life. That would have been priceless. But I got to tour with him. Justin was always there in the room when we would do that. I think your internet connection is better. So if you want to say some things, now would be probably a good time. And Justin was always doing our presentations together, and we got to, I got to be on stage with my idol, and I miss him dearly. And so, Justin, do you want to wrap it up?
Yeah, I'll go ahead and just not much to add there, but I certainly appreciate the direction in my life that got turned because of him. A lot of people go into what their parents do, right? My dad was a soldier, so I'm a soldier. My dad was a cop, so I'm a cop. For me, my family was all teachers. My mom was a teacher. My dad is a teacher.
Mine too.
My sister, yeah, yours too. My sister, cousins, all teachers. And that's what I was planning on doing until I started working for Bill, and it just kind of changed my trajectory. So yeah, I'm very grateful. And at the end of the day, I still get to teach, so it's kind of a pleasure that I, got sidetracked. It was the 1 year turned into 2. I started working for Bill, and now 27 years later, here I am. So definitely something I look back on and appreciate where we are. But let's go ahead and wrap it up there. We're going to see y'all next week, and hopefully take some questions as well. So that's it for us this time around. See you next week. Bye now.